Welcome to PitchIt, the Fintech Startups Podcast. One founder, one startup, one investor at a time. I'm your host, Todd Anderson, Chief Content Officer, Fintech Nexus. Welcome to a live recording of the PitchIt, the Fintech Startups Podcast. I'm your host, Todd Anderson, Chief Content Officer at Fintech Nexus, formerly Lendit Fintech. Joining me today is Ravi Sandepudi of Effectiv. And since this is a live recording, we do have some audience members, just to let the listening audience for the podcast know that, and we'll get to some audience questions towards the latter half of our recording here. But we're going to go through a podcast recording as we would normally. So I like to kick off these episodes with a introduction. So Ravi, if you can tell the audience and the ones that are here joining us live, as well as the listening audience, a little bit about you professionally and what brought you to starting Effectiv.
Cool. Yeah. Thanks a lot, Todd. Thanks for this opportunity. Really love to be here, and I've had some wonderful experiences with Fintech Nexus. So really glad to continue our relationship with this. Hey folks, I'm Ravi, like Todd mentioned, co-founder and CEO of Effectiv. We are about a year-old company in the fraud detection and the financial crime management space. I personally started off at Google, was part of their risk and trust and safety team way back when. I don't want to mention the years, that'll reveal my age, but spent quite a bit of time, almost a decade at Google. Worked on a bunch of products, trying to identify spam, malware, fraud, abuse. So starting from Google Search, then to Google Ads, and then finally Google Pay. It was called Google Wallet back then. And then left Google to join a startup called Simility. At Simility, we were building fraud detection software as well. I was the first employee there, so that's how
they were
got
acquired by PayPal, right?
Yes, yeah.
Yep.
So I started off, really early. It was just myself and the three co-founders for the first 6 to 7 months, and then we started hiring teams. I was based in India at that time. And so it's kind of got the opportunity to build a team in India, then move to London to start another team there. At that point in London, I got a little bit of taste of the business side of things. Got to understand how to manage P&L and grow business and sales and things of that sort. So that was a wonderful experience. And then, while I was in London, we got acquired by PayPal. They were one of our customers, then subsequently investors, and then finally kind of decided to bring us in. After the acquisition, they were very gracious enough to give us a fair bit of independence. So we still continued the Simility business, selling our software to kind of large enterprise banks. We had banks like US Bank, Itaú in Latin America, Discover, Synchrony, Time. Some of those folks were our customers, and then another half of our team, the second half, worked on bringing Simility tech inside the PayPal ecosystem. So we got to launch a version of Simility for thousands of PayPal merchants so that they can control their own fraud rules and fraud strategies. And we also got a chance to work on things like PayPal's chargeback protection program and sell that to merchants outside. We launched in Latin America with that product as well. So I mean, my whole career has been in the fraud detection space. After Simility, I had a brief stint at a startup in India working on like the credit side of things, but I was just waiting for my co-founders to leave PayPal. So I have three co-founders, wonderful co-founders. I've worked with them for a very long time. They were early Simility employees as well, and then obviously subsequently PayPal. And as soon as they left PayPal, 4 of us joined together, and and decided what to do, and we couldn't think of anything else than fraud detection, because all four of
You
us
know it
have
so
had the
well.
exact same career. Yeah, yeah. So Ritesh, Jonathan, and Anupam, and I started Effectiv in late April last year, and since then, yeah, we've had some wonderful experience. A lot of learnings from Simility, obviously, and we are trying to do some things pretty differently and building on top of all the mistakes that we have done at that time and all the lessons we have learned over this course of time.
Now, I know that you mentioned you were the first employee at Simility. Did you always view yourself as an entrepreneur? Like, eventually I'll get there? Or was it some of the issues you saw and some of the learnings and mistakes that were made at Simility that kind of said, hey, maybe we can do this a little bit better? Or, was that drive always in you?
No, I mean, the drive was always there. So my mother has been an entrepreneur, so she runs a few. She started and established a few educational institutions in India. She's very successful, and that kind of like drove that itch in me from a very young age. And then I got the opportunity to be part of Simility very early on, and kind of learned from from the founders at that time, Rahul, Kedar, and Uttam. So really grateful to them for teaching me all the things and trusting me from a very early stage. And then that was just a stepping stone, right? I was just waiting for that opportunity to start something and get that team in, which is very, very important. And I was, again, super lucky to have come across Jonathan, Anupam, and Ritesh. So I couldn't have asked for a better path.
So if you could tell the audience exactly what you guys do and who your ultimate target customers are.
Right. Yeah. So like I mentioned, Simility was, we were selling, I mean, I would say we were selling to a few different kinds of customers, but we were very successful in the enterprise banking space, right? So those were our marquee customers. And what we realized was the way that we had structured our product kind of served that market really well. So it was designed to be on-prem, very customizable, a lot of managed services behind it, and so on. But it was very hard to sell that product to the mid-market, right? So, and at scale, because you needed a lot of managed services to get it up and running. And what we realized at that point was, and this was 2016, 17, there's a huge fintech boom in the US. Yep. And we also were learning a lot about credit unions and community banks and how many of them are there in the US, right? There are 10,000 of them, and 2/3 of the US population have a relationship with either a community bank or a credit union.
Yep.
Right? So this was insane. And we felt like this was a big market that was underserved, especially in this kind of high-tech software solutions like what we do. And what we are trying to do with Effectiv now is kind of bring that same level of sophistication and power of Simility, but make it a lot more accessible to this mid-market sector, right? So starting from the traditional finance space, which includes credit unions, community banks, and other traditional lenders, and then the fintechs, right? So who are in that growth phase. And we want to like serve this market. That's our focus.
So, obviously as someone who's worked in the fraud space for quite some time, we're coming out of, the shutdowns, the real, kind of heavy part of the pandemic where so many people went from banking or doing things in person at brick and mortar type stores to just this flood of new people online. And with that, obviously, fraud concerns skyrocketed. We saw, big headlines about PPP fraud and, the fraud related to stimulus. So as someone who knows fraud as well as you do, kind of where are we today in that fight against fraud? And the last couple of years, has that helped to maybe hone some fraud detection? And, how complicated is the battle today?
Yeah, I mean, a lot of things have changed, Todd. So I think a few things are with the whole kind of things needing to be happen in the digital world rather than the physical world. A lot of new financial, a lot of financial products morphed into that digital space, right? So
Hmm.
things like BNPL, like digital loans, digital card applications, instant approvals for credit lines, uh, instant deposit account openings. All of these kind of became mainstream during the last 2 years. And even the traditional players like community banks and credit unions had to adopt in order to keep serving their members and customers. Right? So that's changed. So what we are seeing now is fraud has moved from the usual transaction stage to the account onboarding stage and kind of percolating into the lending and credit space, right? Like what you mentioned, PPP loans, right? So
Hmm.
that's where we are seeing more of the action happening. And BNPL is another huge area that's getting impacted, right? Which
Yeah.
is a combination of uh, a, a credit line being opened plus a transaction happening at the very same time. So because money is also moving instantaneously, right? So
Hmm.
so what we are seeing is this kind of merge of new financial services and obviously the fraud and fraudsters are kind of adopting and trying to take advantage of these new kind of products. So so yeah, that's been a very interesting area for us to kind of tackle.
Is there a type of fraud that kind of keeps you up at night? The saying most,
Right,
is it first party, third party? I mean, I've heard
right.
in talking to a lot of people in the fraud space, synthetic ID fraud is certainly
Yeah,
becoming a bigger and bigger problem. Is there
yeah.
one that is most worrisome to you?
Right, right. So for sure. So there are two kind of stages, right? So the first is when you're I would call it like the origination stage, right? Like when the financial institution is creating a relationship with their end user for the very first time.
Hmm.
And this is account opening or loan application or BNPL event or things of that sort. And at that stage, there are multiple kinds of frauds, like you mentioned, but synthetic ID fraud is the one that is really, really kind of keeping us awake, right? And that's a tough problem to solve because these are basically manufactured identities and it's very hard to validate if they're good or bad and you need to do multiple things there. The second is once that user is in your ecosystem, the kind of actions and events that they do and and the kind of fraud that can happen at that stage, right? So one is intentionally they're trying to create fraud. And the second is unintentionally where their account has been taken over and there's someone else kind of using
Hmm.
their credentials to make transactions and actually move money. So what we feel is we cannot have like solutions that just act in a stateless manner at one point, right? So we need to have this unified kind of 360-degree view of the end users to look at them throughout the life cycle or the relationship with the financial institution, and then have various checkpoints where we are able to actually identify fraud and stop their kind of actioning.
I saw that, obviously when researching the episode, going to your website, looking at some articles and whatnot, you make a point to say, it's a no code out of the box
Right.
solution. Like, how important is that? Not
Yeah.
only to, the potential customers, but, for those that need a solution in pretty rapid fashion.
Right.
What does that type of solution do versus maybe some others that are not to that specification?
Right. Um, so this is again a big learning from for us from the Simility days and after we did like tons of customer research is one, financial institutions, especially in the mid market, they want a solution right away, right? That works. And because they want to launch a BNPL solution, or they want to launch some new cards, or like new debit cards or anything of that sort, right?
Mm-hmm.
And they want a solution that works. So providing them with out-of-the-box solutions is very necessary, right? So you can't give them an empty canvas or just a platform and expect them to sit and configure and write their own fraud strategies and so on, right? So that's the first thing. The second is, given how the financial products are evolving, and because we are targeting companies and organizations that are in the growth phase and want to adopt and launch new products, we have to also provide configurability and customizability, right?
Mm-hmm.
So that's where the no-code platform comes in, and we want to empower the fraud managers to manage the strategy themselves, right? Historically, fraud managers or operators are not software engineers, right? So they rely pretty heavily on software engineering teams to change the code or change the logic that's running behind the scenes to stop fraud. We want to remove that dependency, because that is the biggest pain point that we heard from the tons of research that we did, especially talking to operators in the fraud management space. So we try to solve these two issues at the same time, where we are actually the biggest users of our no-code platform. So our team sits and writes these default strategy templates for various use cases, and we actually don't sell our platform. We actually sell these solutions, but because the solutions are written on top of our platform, our customers have that flexibility to come over to our platform at any point, tweak and change the strategy and manage it by themselves, and not rely on other people to adopt and evolve to changing fraud trends.
Friction is a tricky thing, especially when it comes to the amount of friction that's right. And when you're dealing with people's money, some level of friction is probably expected, because people want to make sure that their money, their accounts, their livelihood is essentially safeguarded. But is friction thought of too much sometimes as catching a bad guy versus enabling the good customer?
Right.
Because there's always this, yes, let's catch the bad guys. There's all this bad actor talk, but I don't hear as much about, all right, let's reward the customers that do the right things.
No, I mean, that's a great point, and that's a very fundamental philosophy that we believe in, and that's why I try to emphasize this, looking at fraud as a fraud management as a continuous process through the life cycle of the end user, right? It's not a single stateless evaluation that you can do. And the issue with stateless evaluations, where you have a different system for account onboarding, different system for card transaction, different system for deposits, and so on, is each of them look at a particular event in an independent way, and they act on just that piece of information, right? So what we are trying to do at Effectiv is basically, if our platform is integrated at the account opening time and let's say the transaction time, right? Let's say it's a deposit account that we are trying to monitor. So I'll give you a very rudimentary example. It's usually a little bit more complex than this, but let's say someone has applied for a deposit account, and the area code of their phone number doesn't match the state that they provided as their home address. It's a small flag. It's I would say, quote unquote, a yellow flag. Sometimes a little bit suspicious, but what we can do is we can say, okay, yeah, this is a yellow flag. We'll remember. We'll not add any friction. We'll let the account be open. Completely seamless experience for that customer. They're very happy. Now, let's say 2 or 3 transactions have happened, and their 4th transaction is a $10,000 ATM withdrawal at 1 a.m. in the night. Right? Yeah. Again, if you look at it independently, now you can either block it or you let it go. Very likely you would have blocked it, right? But you don't know whether it's an emergency, maybe it's close to a hospital, I don't know, like they're paying out of pocket for something and so on, right? But now if you know what has happened at the account opening time, that and you have identified that there's a little bit of risk, right? And now at the transaction time, which is through some time in the life cycle of the user, you have seen another suspicious event. Now you have those two pieces of information to actually make a more well-judged call whether you want to add friction now. So now you can say, okay, now they've crossed a certain risk threshold for us as a financial institution. Let's add a little bit of friction, right? So let a customer service rep call them and verify that this is a valid transaction. Now that they've done that, that data comes into our system, and now we remember that, okay, they're used to making sometimes transactions late in the night. Their area code doesn't match. They do $10,000 transactions. Now we have that information, and now we can keep evaluating them throughout the course of their life cycle. And we also can look at like logins, PIN changes, password changes. All these kinds of events can flow, and we link them together to a account, to an IP address, to a phone number, and we keep reevaluating in a 360-degree view. So that we feel is a very powerful play.
In that, the example, it's obviously the 10,000 at 1 o'clock in the morning is a strange occurrence. If that's, say, the only occurrence, and everything goes back to somewhat normal, like every once in a while they change their password, or maybe they withdraw $800 but not 10,000. Does that 10,000 marker like move down the list, like, oh, it was a one-time thing, and but if it happens again, do you let it go through, or does more friction come in play again? Is it all kind of just based on the behavior of that user?
Yeah, so we try to do a couple of things. One is we look at the population in general and what is the trends, right? So what we do is we create these heuristics of, hey, for all the folks in and around Nashville, what is the typical behavior, right? So we then compare whether this particular event matches that behavior of that population. So that's the first step. So we start doing that when we don't have enough information about the user itself for that particular user. Now, if they have stayed with that bank or that credit union for a while and they've built some history, now their behavior starts influencing our decision more than the population, right? So we keep customizing the population's heuristics slowly towards that user. And the more and more data we get about the user, now their past behavior influences the decisioning more than the typical expected behavior of the population. So that's how we try to kind of manage. And there are these lot of new technology developments since the time of Similarity as well, like autoencoder models and so on, that we try to train behind the scenes to kind of help us in this direction.
Speaking of information and the sharing of information, fraudsters have gotten exceptionally good at openly sharing information, whether it's hey, we got this much money off someone, or in these chat rooms and in these threads, they'll say, hey, this is how we've got by a system, or they're openly communicating as a fraud ring. And I hear that it's starting to happen more, but are the good actors, the good guys, so to speak, are they sharing enough? And I know that there's always the issue of PII and regulatory issues, but I mean, I would assume that there's some level of things that can be shared, whether it be anonymized, tokenized data and stuff like that, that can give, because ultimately, if take two banks, Capital One and Chase. If Capital One is hit, it doesn't help Chase. Chase can't say, all right, it's only Capital One's problem, because chances are Chase is going to be under attack somewhat soon after that anyway, if they aren't already. And so do, financial institutions and the good actors need to find better ways to share information like fraudsters do.
Right. No, I mean, yeah, definitely, and that is a part of our vision as well. Is like how Experian and Equifax are for credit risk. We want to be that for fraud risk, right? So we want to be a consortium where we are able to share fraud patterns in a privacy centric way across our set of customers. So right, so if they opt in to contribute, they get to use the value of that consortium as well. So in a two-way exchange, right? And
Gotcha.
we want to do that in a privacy-centric way, and we are working very hard towards it, working with our legal counsels and so on, so that we are very, very careful, because this has been tried a few times. It's always very hard to get it done given even the current scenarios, right? Especially our focus on privacy. But I mean, it's happening already, like I said, on the credit side. It's happening on the cybersecurity side. Fraud sits in between, right? In that
Yeah.
flow. And this is that one area which is still, we feel like, underdeveloped. And I think us and a lot of our peers in this field, I mean, should work towards it. Like I think, like you mentioned, it can add a lot of value.
One of the things we hear about in the news, especially lately, is not only are interest rates and economic conditions becoming more complicated, but a recession is looming. And obviously, when that happens, organizations, especially financial institutions, do a couple of things. One is they certainly batten down the hatches, and the people that are kind of on the far end of their risk spectrum begun the risk spectrum comes in, and people obviously are denied credit or denied potential products. But on the other side, they also look to potentially cut costs. And as someone who's in the fraud space and knows it so well, are you concerned about the upcoming potential recession and what that might mean for the battle against fraud?
Right. No, I mean, for sure, we are very carefully observing what's happening. But what we have seen, Todd, I'm sure you observed this as well, but during recessionary periods, fraud again spikes up because of multiple reasons, right? It could be or a lack of finances, and it just adds a wrong kind of motivation to people to make money. And because and if a financial institution is well established, they still, what we saw, and we've seen a little bit of this in 2014 and similarly as well, but if a financial institution is well established, they still have that spending power to look at software services like ours, and they see that value, right? Because for them, it is still very important to maintain clean books and maintain clean money within their ecosystem, and protecting themselves, especially during such times as recessions, is very important. And usually financial institutions that sustain well during these periods flourish drastically well after the recession is over, right? So usually the smarter companies double down on building that clean business and sustainable business during recessionary periods, and that's true for startups like ours as well. So and our focus is on selling or working with growing sustainable financial institutions, and we feel pretty confident that that our demand will still remain high, and the importance of companies like ours will still remain important during these times.
Given a question just popped in my head was, you mentioned when at Simility you worked with Itaú down in Brazil, Discover, a couple of pretty sizable banks. Are the are the needs of the sizable bigger banks different than, say, the mid-sized
Yeah.
institutions that you might be focusing on now?
No, yeah, for sure. I mean, the problems are very similar, but the
Mm-hmm.
way that they are structured is very different. So this is 6-7 years ago. Most of the big banks that we worked with expected us to be installed on premise, right? So that was one thing that has changed now. A lot of actually financial institutions that we work with actually appreciate that we are on the cloud, because they themselves have mandates to
Yeah.
move their systems under cloud, and for them this is a checkbox that, hey, a portion of my software is already there. So that has changed. And the second thing is, a lot of the big enterprise institutions have their own fraud teams, their own developed processes, and they want to implement their processes on the softwares that they buy, right? So there they need a platform, right? They don't need pre-built solutions. In fact, they don't appreciate if something is pre-built and hard, and we try to enforce that you use it and things of that sort. So they prefer like
Yeah.
empty canvas solutions, and they try spending months and months of time customizing and building, and they need customer support, people sitting there and working with them and things of that sort. For fast growing companies that we are targeting and institutions that we are targeting, they need something that works from day zero, right? With the comfort that they can always customize and tweak it at a later point in time. And that's the difference that we see.
You mentioned launching a little over a year ago. What's the biggest lesson since you've launched that you've learned?
I mean, I'll keep the fraud, the lessons on what kind of fraud that we're seeing and things of that sort, because we covered a little bit about it. But in general, I think as a company, I mean, I got that opportunity as the first employee at Similarity, but still, I'm a first-time founder. All three of my co-founders are all first-time founders. So I think the biggest lessons that we've had is on the business side of things, and articulating the value that we provide to our customers in a very crisp and clear way. Has been something that we had to learn through very hard lessons, right? Because we are all like product folks, and like Ritesh and Jonathan were like hardcore data scientists. Anupam and I were like hardcore engineers. So building the product is part of our blood, but selling it and showing the value to customers has been something that we had to learn the hard way. And I mean, we are nowhere close to it, but we take it by the day and learning every time that we speak.
What's the best piece of advice you've received so far?
Right. No, I think I would say two things. So the first and foremost is the team, right? I think if you do, the thing is, every day that you wake up, you should enjoy working with the people that you are. So the biggest advice that we got from our like early advisors and peers was to just work with the people that you love working with, and that's the very first thing that we chose to do, right? We formed the team first and then decided what to do. And the second thing was, which came a little later, was that build something that creates significant value to your customers, right? Sounds a very cliche, but I think that this kind of mentality drives us every day and out. So whatever decision that we have to take in the company in terms of like the product or the business or the sales or anything of that sort, we just keep that as a yardstick and see, hey, does this increase the value for our customers? So even for something pretty technical like a fraud detection software, we always think about it, right? Like at this stage, we are providing tooling, which is some bit of value. right? Like it makes our users more efficient, a little bit more accurate. But let's say we move to that consortium, right? Like we are able to build that data consortium and share
Hmm.
trends together. Now that's adding even more value, right? We are providing data value and actually stopping badness from impacting other customers even before it actually hits them. And then what more can we do, right? Can we get to a stage where financial institutions just don't need to worry about fraud at all, right? I think at this point, this on the cybersecurity space that is touching there, right? Like now there are systems that are so good. There are financial products like insurance and so on that are happening around that ecosystem of cybersecurity that most institutions just have to go. It's a checkbox, right? I go this vendor and I'm set, right? And I don't need to worry about 99.99% of the scenarios. Right? Because there's someone else doing that hardcore research for you. Like there's Google Cloud and AWS having thousands and thousands of people building those critical systems for you so that you don't need to worry about that. So that I feel is like the ultimate value that we can provide, a stage where it's like a de facto kind of option for anyone and they just don't worry about fraud.
To our current live audience, we'll get to questions shortly if you have any. So please put them in the Q&A box. But we have a few minutes left here. So I did want to ask. You mentioned team, and you've mentioned a few of your co-founders. How big is the team right now? And are you guys distributed? What does the team look like today?
Yeah, we are a fully remote distributed team. Again, the consequence of the last 2 years, and so we took real advantage of it. We are about 20, a little under 25 folks, and 24 folks now, fully distributed. We have a team in the US and in Europe and in India. Our co-founders ourselves are fully distributed throughout the globe. So we set up the team that way, and we're about, I think, 80% are on a technical, like product engineering design. About 20% are on the business side, and I think we'll keep it that way because we see our product as the most important thing that we'll ever build. So that'll be maintained.
I saw that you guys, on your website, you have that you raised a seed round. What was the biggest thing that you learned during the fundraising process about your business that maybe you didn't know beforehand, maybe through pitches and whatnot, right, that if another founder were listening to this episode sometime in the next few weeks, that maybe they could take some tidbits off of?
Right. No, I think, again, like we were first-time founders, very technical folks. So our early pitches, we are quite embarrassed by them at this point.
They're good learning, though.
But yeah, I know. Actually, the more that we spoke with investors, we actually learned so much about the potential of our business, right? And one of the things that gets thrown around quite a bit, but it's still very important, is your total addressable market, right? So that they call it TAM or whatever.
Yeah.
But the more that we did our research, we realized how big the fraud detection market was. And I mean, we were already very passionate from a technical point of view in this space, but we got really a lot more excited about the potential here, right? So for example, I think there's some McKinsey reports that speak about this market growing at 30% CAGR, right? Like a cumulative annual growth rate of 30%, which is one of the biggest in any SaaS, B2B SaaS software space. And about estimating $250 billion market by 2030 and all that kind of stuff. And then more importantly, the fraud numbers are also growing at that same rate, right? So again, there's a PwC report that talks about close to $50 billion worth of fraud losses in 2021 across identity fraud and transaction fraud, right? So it's great. And that's like 3x from 2020. So it's growing like mad. So the problem is growing, the business is, the market is growing. So this is something that I would really suggest all founders to do their research about the addressable market. This might sound very dumb for a lot of smarter folks than me, but please do look at it, because one, it helps you sell your idea a lot better to investors, and two, it brings a different level of motivation to you and your team when you look at the potential of the business that you can build.
So I like to end these episodes with a little bit of fun and some light questions, a little rapid fire. So do you have a favorite book and the last book that you read?
Favorite? Okay. Don't call me basic, but my favorite book is Lord of the Rings. I'm a real big fan and a nerd of Lord of the Rings. But the recent book I read is I've gotten back to Agatha Christie books. So they're pretty light reads. And like startups are very stressful
Oh,
during the early days. So they give me good respite. And I think the classic Then There Were None, I think the Agatha Christie book, it's a classic. I've read it a few times and I think I'll continue reading it.
What do you do to kind of step away and kind of let your brain, shut off and just relax?
I have a 2-year-old kid, a son.
There you go.
So,
I have a 3-year-old.
He'll kill. Oh, okay, perfect. Yeah, and then you know that you can't do anything else than spend time with them.
Yep.
But they're a good brain shut off kind of an exercise, right? Like you forget about everything else.
Exactly. Do you watch sports? Do you partake in any sports? Have favorite sports?
Partake is a tough sell, but I do watch. I think in my heart I'm always Indian, so cricket is a big part of my life. I don't know how much of our audience would understand, but like there's this league called Indian Premier League, which has sort of regional sports teams kind of playing, cricket teams kind of competing against each other. Very similar to like NFL and NBA and so on. But yeah, our home city team is not the best, but I'm a passionate fan of the Hyderabad team. But I do watch NBA. I saw obviously like Steph Curry and the recent kind of his amazing leadership.
Yeah, one thing I could never understand is cricket. I need to. I've had many guests talk about it. I've looked at it briefly, but it's to me it looks like a very complicated game.
Right, it is. It is.
Do you have a favorite vacation spot?
Again, this is a weird place, but I don't know if any of you have visited Bruges in Belgium. It's not a very charismatic place, but very quaint. And yeah, I don't know. I like the European stone roads, not a lot of trees, but a lot of streams and those old European cities. And Bruges is very interesting place. There's actually a movie called In Bruges, which shows the depressive atmosphere of that place. But believe me, it's nothing like it. It's actually quite good.
And then final question, biggest inspiration in life?
I mean, this I can't lie. I think I mentioned my mother, so she's been a huge inspiration for me. I mean, it's always hard to be a female entrepreneur, but I think she like really pushed through. This was 25, 30 years ago to start those educational institutions. She's now doing her PhD in law. She's 64. And,
wow.
I don't know what drives her so much. So, yeah, I mean, so I hope, I have that amount of drive, but I'm sure I won't. I just want to retire soon.
Well, Ravi, I appreciate you taking a few minutes and coming on the show. How can, if the audience that's listening live now, or the audience that will listen live soon, then will listen to the recording, how can they find you? How can they find the company?
Yeah, on our website, Effectiv.ai, or you can write to me directly, Ravi, Ravi at Effectiv.ai at any time. I'm always awake, so I'll respond to you within 15 minutes. Like I said, I have a 2-year-old kid, so I don't get to sleep in the nights. But so yeah, please do reach out if you have any if you want to talk about anything. I'd love to do so.
Well, thank you very much, Ravi. I appreciate you taking a few minutes. Thanks for coming on the show and sponsoring an episode, and continued success to you and the team.
Thank you so much, Todd. This was wonderful.